Warren Buffett explains exactly how to get past this pandemic economic crisis. First, I'll cover some of Buffett's ideas and then we'll go deeper into each subject. Interest rates are the lowest they have been in years. This is good for who is getting a loan, but not so good for who is giving the loan. It is usually a good idea not to fight the Feds. If one has the means and a good credit score, this can be the perfect time to start a profitable business. Or buy that duplex, paying little interest, rent it out and start house hacking. House hacking means living for free or almost for free, usually by having the tenant pay the mortgage for you or pay most of your mortgage for you. With virus or no virus, everyone needs a roof over their heads. If finding the right deal, you live for free, pay the mortgage and maybe even still have some cash flow at the end. Hope for the best but prepare for the worst. Have a plan A and a plan B and maybe even a plan C just in case if needed. If you have interest on Buffett or related topics, please drop a like. And if you are new here, subscribe, hit the bell and share this video with a friend. You will be helping the channel and you'll get the next video. Use credit cards the right way instead of buying and carrying over balance and then paying 15% interest or 25% interest, you pay the credit card in full. By paying the credit card in full before the interest kicks in, you never own anything and you can take advantage of all perks and if also available cashback. This is a great way to build credit score and if so desired you could even go the extra mile like I do. Credit card for me is a source of income. It's not something meaningful enough that I can live off of it, but at least it's free cash and whenever somebody offers me free cash, usually I take it. So as you see on the screen, my current balance for here is zero. I own $0 to the credit card. My current rewards on cash here is 158, so I own $0 to the credit card. The credit card owns me 158, and I don't have any expenses, so it's hard to make this number big. As you see, only $150 here for Boost Mobile, which is my phone company, but that's 5 lines. I only pay $30. The other lines is my brother, my wife, and I don't even have cable. I don't have expenses. This Comcast is just for the internet, about $54.92. For entertainment, I just use YouTube, no more cable. They were charging me hundreds, so I canceled it. Me saying this here, in a way, could be bad for me because if everybody collect more money than they pay, the credit card companies and banks would go broke and they would no longer provide such perks and cashbacks. But we will be fine because even if thousands of people know about this, very few people go ahead and take action. One more thing on this is that if the credit amount one owns is completely out of control, it might be a good idea to consider a consolidation. So you end up paying a 6% interest instead of the average 18%. And the last thing I will mention at the end of this video is that being aware of what is happening around us means politicians, mostly Democrats, just finished in almost 2 years deep look that they did into Apple, Facebook, Amazon and Google, and the results were what we already knew. These companies are getting too big and too powerful and some politicians are trying to break them down. Each single one of these companies control more money than entire nations on our planet. They are considering not letting a single company be involved in so many sectors at the same time. If a company wants to be an internet company, that is fine, but that would prevent them from being involved in every single sector. It does get to become a little mind-boggling, for example how Amazon sells items, but they also have a platform where all these other companies come and sell items. Usually a single entity does not get to be the referee and also the player at the same time. On the selling game or any other game, if one player gets to also be the referee, how fair will that player be to all the other players and how would it look to everybody else looking at it? When I first heard about this, if government breaks down these companies, I will lose money because I am invested in all of these companies. But after giving the breakdown idea more thought, I came up to the realization that it could be better and more fair to everyone. Once a single individual have control of everything or almost everything, it becomes too much. That becomes a monopoly and there is no more competition and it becomes no fair or good for the consumer. Some of these companies are gigantic with tentacles into everything. Share your thoughts on the comment section down below as I go over Buffett's thoughts and strategies. On Yahoo Finance, the headline says, Warren Buffett says, this is how you get through COVID-19 financially. The coronavirus and its accompanying recession have hit everyone, including billionaire investing legend Warren Buffett. Most of the company making up his massive conglomerate Berkshire Hathaway felt relatively minor to severe effects from the COVID-19 outbreak during the spring and early summer, Berkshire's most recent earnings report reveals. Even so, Berkshire reported an 87% jump in quarterly profits, so the Oracle of Omaha would seem to be weathering the crisis just fine. You can follow his lead. Here are 5 examples of how you can benefit from Buffett's advice to act defensively and keep that under control while the virus rages. Take full advantage of low interest rates. Buffett became one of the wealthiest people on the planet by capitalizing on opportunities. He sees fantastic opportunities for borrowers in 2020 thanks to the Federal Reserve. This is a very good time to borrow money, which means it may not be such a great time to lend money, but it's good for the country that it's a good time to borrow money, he said during Berkshire Hathaway online shareholders meeting earlier this year. To help the economy recover from the coronavirus, the Fed did the right thing by cutting a key interest rate almost to zero, Buffett says. Other rates have fallen like dominoes throughout the economy. How to be like Buffett? If you are a home buyer or homeowner and have a solid credit score, grab one of today's all-time low mortgage rates while you can. It's possible to find rates on new and refinanced mortgages as low as 2.5% if you shop around and compare mortgage offers from multiple lenders. Always be ready for the worst. They don't call him an oracle for nothing. The multi-billionaire said during an interview in March, I've always felt a pandemic would happen sometime. In 2019, he warned that the world was due for a mega catastrophe. It would be some kind of total surprise that would dwarf devastating hurricanes Katrina and Michael, Buffett told Berkshire shareholders in a letter. He said his company, which is big in the insurance business, he owns Geico and other insurers, would suffer massive losses but would be ready for businesses the next day. How to be like Buffett? You too can be ready for whatever comes by buying life insurance to provide financial protection for your loved ones. Coverage for family breadwinners has become especially important in 2020 in the midst of a deadly and highly contagious disease. In just 90 seconds online, you can find multiple life insurance rates tailored to your family's needs and costing as little as $1 a day for $1 million in coverage. Don't carry credit card balances. As layoffs have skyrocketed during the pandemic, some Americans have found themselves forced to pile on more credit card debt. Turning to credit cards because of financial hardship is one thing, but Buffett says some people use plastic as a piggy bank to be rated. During the virtual shareholders meeting, he talked about a friend who came into a windfall and asked for advice on what to do with it. She also had credit card debt at 18% interest. If I own any money at 18%, the first thing I do with any money I had would be to pay it off. Buffett said to her, "You can't go through life borrowing money at those rates and be better off." How to be like Buffett? When credit card debt becomes overwhelming, experts say a good first step toward getting rid of it is to roll it into a debt consolidation loan. You'll simplify your bills and slash out interest costs to help pay off the debt faster. Instead of 18%, you might find yourself paying as little as 5.95% APR. Do your homework with stocks. The coronavirus crisis is ravaging entire industries, including retail, restaurants, and entertainment. Buffett has decided the damage to one particular industry is more than he can bear as an investor, the airline business, and I may be wrong, and I hope I'm wrong, changed in a major way, he told his shareholders. That was how he explained why Berkshire sold off all the airline stocks he owned. Buffett says people have been discouraged from flying, so the world has changed for the airlines. One of the carriers his company dumped from its portfolio was Delta Airlines, whose stock price has lost almost half its value since the start of the year. How to be like Buffett? Investors who do their homework and make informed choices have been rewarded this year as the stock market has marched to new record highs, even amid chaos of COVID-19. A popular stock trading app helps you reduce your risk by diversifying your investments into exchange, trade funds, and even fractional shares, pieces of individual stocks, and you never have to pay any fees or commissions. Stick to your long-term plan. Warren Buffett says he's confident in the US economy will bounce back from the COVID-19 crisis. Nothing can basically stop America, he said at the online meeting. We haven't really faced anything that quite resembles this problem, but we face tougher problems. The American miracle, the American magic has always prevailed, and it will do so again. But he also said no one knows what's going to happen, so investors should brace themselves for a potentially long recovery. He says they'll get a fine result if they hold onto stocks long term. How to be like Buffett? A financial planning service can help you sit tight and stay focused with your investments, and using one if much more affordable and convenient than you might think. Today you can connect with a certified financial planner online and inexpensively to keep you on track toward your long-term goals. Many people don't like Buffett, and many people say he's getting too old, but even though he is not a tech company that is profiting from the pandemic, he still managed to be profitable and take advantage of opportunities during all this crisis situation. And finally, as I promised on also Yahoo Finance, House panel urges tech giant break up in plan Republicans shun. A House panel proposed far-reaching antitrust reforms to curb the power of U.S. technology giants including Amazon, Google, culminating a 16-month investigation with a damaging 449-page report that Republicans largely shunned. The recommendations from the House Antitrust Subcommittee represent the most dramatic proposal to overhaul competition law in decades and could lead to the breakup of tech companies if approved by Congress. The findings target 4 of the biggest US tech companies, Amazon, Google, Facebook, and Apple, describing them as gatekeepers of the digital economy that can use their control over markets to pick winners and losers. The companies have abused their power to snuff out competitive threats, leading to less innovations, fewer choices for consumers, and a hobbled democracy, the report said. Companies once were scrappy, underdog startups that challenge the status quo have become the kinds of monopolies we last saw in the era of oil barons and railroad tycoons, the panel's Democratic leader said. These firms have too much power, and that power must be reined in and subject to appropriate oversight and enforcement. Our economy and democracy are at stake. Facebook fell more than 1% in late trading after the report's release. Amazon and Apple slipped less than 1% and Google was unchanged. The staff report's most consequential recommendations is for Congress to consider legislation that would prevent tech companies from owning different lines of business, which could lead to a mandate to break them up. Their ability both to use their dominance in one market as negotiating leverage in another, and to subsidize entry to capture unrelated markets have the effect of spreading concentration from one market into others, threatening greater and greater portions of the digital economy, the report said. As we see, many things keep on changing every day, and it's a bit hard to keep up. Alright guys, I will be wrapping this video up here, it's getting longer than expected. Thank you so much for watching this video. Feel free to check out some of the other videos coming up on the next screen. Have a healthy and wonderful day. Many things keep on changing every day.